Hey, it's KK from TK Financial Group. Thanks for joining in again. I hope you're all doing well. As you can see, I got a haircut. The barber just opened up, and this was an experience. I had to wear a mask while they were cutting my hair. They couldn't blow dry my hair because they were worried about the hair falling all over the place. So it was kind of hard wearing that mask. I guess this will be the norm for a little while. But let's get going on the topic that I find many people don't act on. I will start with a story this time, and I will then go into the details. We are going to speak about mortgage insurance versus life insurance because those are two different things. So when you purchase a home, do you remember the mortgage agent at the bank or the broker asking you whether you wanted to insure the mortgage with a mortgage insurance? They asked you about 5 questions, and then all of a sudden you were approved, and that was really easy, eh? So I want to tell you about a story about my friend. She had purchased mortgage insurance from the bank, and they also had life insurance. Now, this was for her mother. Her mother suddenly passed away, and they had to do a claim on this. So the family called the insurance guy, and they basically got paid within 2 weeks. Then they called the bank and spoke to the mortgage insurance specialist over there, and they had to wait. Remember those 5 questions I talked about? Well, guess what? They didn't go through a process called underwriting, so they did it afterwards. So don't you think there's something wrong with that? So when you apply for life insurance, you have to go through underwriting. There's a lot of questions about your health and about what your blood has to say about you. They do a urine test. Now, this wasn't done at the bank. They don't do this when they do mortgage underwriting. So what do they do? They do something called post underwriting. They only do it after you pass away. So once you make a claim, they're going to find out everything about the person that passed away. They will write the doctor, and if they find anything, they're going to tell you about it, and they'll say they won't pay. And that's the bad thing about it. This did not happen to my friend. It took the bank 8 months to settle the account because they had to keep writing back and forth with the doctor to make sure that those particular questions were answered correctly. So you take a look at life insurance, it ended up paying out in 2 weeks, and you look at mortgage insurance, it took about 8 months to pay out. So who in their right mind is going to wait for a payment for 8 months? So let's go through the advantages and disadvantages of purchasing mortgage insurance and life insurance. The first advantage of mortgage insurance is it's easy to apply for. You answer several questions, no blood, no urine, and you're approved. With life insurance, you will have to answer many questions. They may require blood and urine. Then an underwriter will approve you or not. Now just remember, with the mortgage insurance, you don't own the policy, the bank does. But with life insurance, you own the policy. So you can take it with you when you decide to change banks. So let's say the bank doesn't give a proper amount of loan to you, and you want to go to another place to give you that loan on your house. Well, you'll have to change banks, and guess what? Then you have to reapply for that mortgage insurance again. With life insurance, you can actually take that with you. So the premiums at the bank are not guaranteed. They will increase in time. With life insurance, they are guaranteed, and the premiums will be lower than the mortgage insurance would be. So here's a chart that explains this and more. So let's say your mortgage is $300,000. In 5 years' time, it will be worth less, and you will still be paying the same amount, if not more, for your mortgage insurance. So watch the line. It will continue to decrease, but your payments will not. So now take a look at the green line. This is the life insurance. You pay the same amount, and the amount of life insurance stays the same as your mortgage decreases. So which one would you choose? The one that decreases or the one that stays the same? So here's the fine print. The bank won't tell you the beneficiaries. So who do you think the beneficiary is of that mortgage insurance? Yep, it's the bank, and it's not you. That's a sad thing. So they're just protecting themselves from you passing away. With life insurance, you can decide who the beneficiary is. The last item I want to mention is not on the screen. When you are applying for mortgage insurance, they really don't know anything about it. It's the law that when a mortgage is sold, they must ask you about mortgage insurance. They don't sell this to you in their best interest. Otherwise, you should be paying less and getting more for your money. So realize that mortgage insurance is only protecting the bank, and life insurance is actually protecting you. So if you have any questions, please don't hesitate to make a comment in the question box below. Or otherwise, you can always send me an email too as well at karim@tkfg.ca. That's KARIM@tkfg.ca. My next topic will be on permanent insurance. So stay tuned, take care of yourself. Until next time, we'll see you.